Good morning and welcome to Markets Cafe. You're on ET now with me, Lisa Fernandez, and with me I have Shreyansi. A very good morning to you, Shreyansi, and a very happy Friday also. I'm excited about this Friday because though it marks the end of the final full trading week of 2023, it also marks the beginning of the Santa Claus rally, and I'm just hoping that Santa Claus will bring cheer across the markets and hoping that we see Christmas is a shade of red and green, like though I've worn red today, but then I hope it's green shade across markets. So let's begin with the show and starting with the international handover coming in. Lots of moving parts because the GDP data was out and the initial jobless claims. How's the market looking?
Yeah, so it's been very interesting. It's been a shade of red, but only in terms of the cheer and not in terms of the decline. Because we've seen a bounce back on Wall Street. The Dow rose about 322 points and erased most of its losses from Wednesday. Now, when you look at the S&P 500 or the Nasdaq composite, they rose 1% and 1.3% respectively. And if you're looking at the small cap Russell 2000 also, you're looking at a gain of about 1.7%, continuing a recent trend of the market rally broadening out as bond yields fall and traders bet on rate cuts from the Federal Reserve. Now, the small cap index is also on pace for its sixth straight positive week. When you look at the three major averages, they're on pace for their eighth positive week in a row. A first for the S&P 500 since 2017 and for the Dow dating back to 2019. Now, the S&P 500 is up about up about 0.5% for the week, while the Dow has again like a slight gain coming in. But when you look at the Nasdaq, that one is up 1% for that same period. The US stock market, mind you, will be closed for Christmas on Monday. And when you're looking at the 10-year Treasury yield, you're looking at a rise coming in as investors assess the path of future rate cuts from the Federal Reserve. The yield on the benchmark 10-year Treasury note was higher by 1 basis point to 3.8% thereabout. And earlier in the session, mind you, it fell to 3.8%, which was its lowest level since July 24, when the 10-year yield fell as low as 3.7%, Lisa.
Right, so let's move on to the crude and other commodities are doing as well. Now, talking about the oil prices that settled lower actually, and this is after Angola said that it would exit the OPEC, and that actually raised questions about the producer group efforts to support prices by limiting the global supplies. Now, earlier in the session, both the benchmark indices, I'm talking about the WTI as well as the Brent crude prices, that was down by more than $1 per barrel. But now, if I look at the prices, I can see it's in green and it's got those gains coming in because WTI crude oil that's 0.3% higher, and even Brent crude that also it's at the same percentage higher. Now, Angolan oil minister, he said that the country's membership in the OPEC that was not serving its interest. The Saudi-led producer group in recent months have been rallying support to deepen the output cuts and also boost the oil prices. Now, talking about Angola, how much it produces around 1.1 million barrels per day, and that is compared with the 28 million barrels per day for the whole group. Now, separately, talking about the data coming in from the US Energy Information Administration, that is EIA, they said that the US crude output that rose to a record 13.3 million barrels per day last week, up from the previous all-time high of 13.2 million barrels per day. So yes, these are what's trending on the oil prices. But if I look at gold, that's hovering at around $2,000 per ounce level. And yes, so that's on the oil and crude prices. So these are the issues which, surrounding the oil prices. But and this adds to the Red Sea issues, which we already, that's going on. So what about that, Shreyansi?
Yeah, absolutely. So when you're looking at events to watch, you're looking at, on December 22nd, you're looking at UK GDP as well as US core PCE price index. Now, in terms of corporate action, there's a host of corporate action. You've got Avas Financiers, that is mulling issuance of NCDs. You've got JK Tyre, that is mulling issue price of shares. Now, you've also got UPL that will remain in focus on account of mulling a proposal for fundraise, as well as Mrs. Baker's Food. Now, they have a 20% equity out of lock-in period, and you've also got SIS Limited that has a buyback issue to close. Now, in terms of IPO action, Lisa, if there were a Santa Claus, it's really been very very kind to the primary action that we've seen in the market. In terms of IPO action, we've seen Azad Engineering. That one has its last day to subscribe. So keep an eye on that one as well. But in terms of other events, you do have Finance Ministry reviewing the performance of PSBs. So commentary from that particular meeting will definitely be remaining in focus.
All right, so let's move on to the other global stories as well. Now, the macro data that the markets will be eyeing today, the US Q3 GDP, that has been revised lower to 4.9%. Now, that's slightly below that 5.2% in the second estimate, but it matched the 4.9% which was initially reported in the advance estimate. Now, the reading down from the second estimate, increase of 2% and lower than the rise of 5.1% which was seen by the economist. Now the real GDP that rose 2.1% in the second quarter.
Athletic apparel and footwear giant Nike Q2 results beat analysts' expectations, but the company tempered expectations as they warn of a softer second half outlook for revenue as it looks to streamline operations, targeting up to $2 billion of cost cuts over 3 years. The share also tanked around 10% during the after-trading hours.
Let's focus on what's happening in the auto sector. Now, after Toyota, auto giant Honda has also joined the bid in recalling vehicle units. Now, the company is recalling around 4.5 million vehicles worldwide over risk of pump failure. The recall includes 2.54 million vehicles in the United States. Now, remember, the automaker had previously recalled several units over the same issue over the last 3 years.
With 158 vessels carrying approximately $105 billion in ocean freight being diverted away from the Red Sea amid the risk of continuing Houthis attacks, cargo prices are soaring. Just when COVID supply chain inflation seemed vanquished, ocean freight rates are increasing 40% on some trade routes and container prices reaching $10,000.
And as I pointed earlier about the Red Sea issue, many ocean carriers have stopped their ships from using the Red Sea following the projectile attacks from the Yemen-based Houthi militia. Now, the rerouting that has disrupted the global trade, and that is being seen as a key inflation risk. Now, to get more clarity on what's the impact, how this supply disruption, it's impacting the global trade, Snehi Shah is joining in with this detailed report on this. Snehi, over to you.
Well, on the 15th of December, the world's second largest container shipping company, Maersk, announced that it will suspend all container shipments through the Red Sea and reroute its vessels around South Africa's Cape of Good Hope in response to the attacks on its vessels in the Red Sea. Following this announcement, major players in this space like MSC, CMA CGM, Hapag-Lloyd and others have also followed suit, and Chinese and Taiwanese container shipping companies are considering similar measures, and there have been announcements about temporarily stopping accepting Israel cargo. Now, why are these companies looking to reroute, and what's the trouble that's brewing in the Red Sea? Iran-backed Houthi militants in Yemen attacked commercial vessels in the Red Sea to show support for the Palestinian militant group Hamas. The Houthi group has reportedly vowed to continue operations targeting Israeli ships or vessels headed to the Israeli ports. Now, what's the impact of these attacks? Analysts at BOFA say that around 28% of the world container trade and 12.3% of the crude tankers use the Suez Canal or the Red Sea route. That map will be on the screen shortly. Alternate routing via the Cape of Good Hope would add an average of 30% to journey times for containers, or about 22 days more on a round-trip basis. That is indicated by the red line on the map that shows an entire rerouting from the Cape of Good Hope all the way to Europe. Now, if all companies were to adopt such measures, this would cut shipping capacity on routes from Asia to Europe by roughly 30%. The Suez Canal is the quickest sea route between Asia and Europe and one of the key choke points for global trade. Recall the supply chain snarls caused when the Ever Given container ship got stuck in the Suez Canal for just 6 days in 2021, but disrupted around $9.6 billion worth of world trade per day. For businesses, the immediate impact will be felt via higher trading costs, like higher insurance premiums and delays in shipments given diverted vessels. This situation is likely to cause shippers to once again become mindful of supply chain disruptions like those seen in the past years, and analysts think that this is likely to put upward pressure not just on spot freight rates, but also on the yearly contract rates. Analysts I believe it would not be particularly surprising for spot rates on this route to double or even quadruple. Now, while the impact of these attacks is believed to be short-term in nature, we have seen a spike in crude oil prices over the last few days. What's the potential impact on India then? One of the biggest impacts of the blockage of trade or use of alternative routes is usually an increase in the freight rates as routes get longer and volumes reduce. Now, while this is beneficial to shipping companies, increasing costs of transportation and delays in shipments could have a much larger impact. Overall, logistic costs are bound to rise, which Indian exporters and importers may find difficult to pass on to end users. As of now, it is too early to say and talk about the impact of this development on India's earnings story. However, we have seen a few shipping stocks like SCI and GE Shipping rise over the last few days, and some of the import-dependent sectors that could be impacted include textiles, oil and gas, chemicals, some capital good companies, metals, as well as pharma. So keep an eye out for all of these sectors.
Well, thanks, Nehi, for that update. With this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Very good morning and back to the show. So let's start with what's happening in the Asian market. Well, Asian Pacific market, it rose and it mirrored the global market moves that was witnessed in the US as well as the European market. But let me mark and put the spotlight on Nikkei first, because the Bank of Japan's monetary policy meetings that was out, and we can see Nikkei is 0.3% higher in trade and shade of green. And let me talk about the monetary policy. Now, it showed that the board members debated on how to communicate the shift in their yield control stance. Now, Bank of Japan adjusted their yield curve control policy in October, saying that the target level of the 10-year Japanese government bond yield, that will be held at 0%, but it will take the upper limit of 1% as a reference instead of a strict cap. Now, even the inflation data showed it slowed down actually to 2.8%, down from 3.3% in October, and that is the slowest pace of inflation since July 2022. Now, the core inflation, which strips out the prices of fresh food, that came in at 2.5% with the expectations and in line with the expectations of Reuters poll of economists, but still it was lower than the October figure of 2.9%. So that is why we can see Nikkei, it's quite cheerful and trading with the gains coming in. But let's move on to ASX then. It's trading flat and but still trading with a positive bias. And now let's focus on Kospi then. Kospi is also in green and it's 0.2% higher. Nothing on the cards coming in on the events and all, nothing for the Asian market as well. And even China market, if I look at Hang Seng index, that's around 3.10% higher in trade. Moving on to Shanghai, then Shanghai is the only one that is in red. Earlier in early trade that was in green, but now that has slipped in red as well. It's down around 0.3%. But let's shift focus on our Nifty as well. So Nifty that closed a little above the 21,200 level, and Gift Nifty that is implying that 21,385. So modest beginning, modest gap up opening for our market as well. So let's see how it pans out for our market as well. Shreyansi.
Well, absolutely, Lisa. So here's hoping that the market open does not have the color that you're wearing.
Welcome back to the show, and we are on that part of the show where we focus on what's happening on the domestic front and also take you through the stock-specific action. After the initial report stemming from Bloomberg suggested that Zomato had extended an offer to acquire Shiprocket, valuing the startup at approximately $2 billion. Now, Zomato's Dipinder Goyal, he has, however, in a statement refuted this news, saying that he would like to caution against such incorrect news floating in the market, and he has assured that they remain focused on the existing business with no acquisition plans.
Well, Lisa, it's also very interesting what is happening with Flipkart as well, because according to the Economic Times, the e-commerce giant is also set to raise $1 billion in a new funding round with a major commitment of $600 million from its largest shareholder, Walmart. Now, this marks Flipkart's first fundraise since 2021 and is expected to value the company at a 5 to 10% premium to its last valuation of $33 billion. In fact, talks are also underway with both existing and new investors, emphasizing the crucial funding amid challenging conditions for Indian startups.
And for all you car lovers, this is for you. My colleague Bhavya Dua is joining us right from inside the Tata Motors EV showroom to tell us some unique features that the showroom is offering. Let's take a look at the same.
Now entering in the store, the first screen that we see is configuration, in which you can see how your EV is going to look like. So let's get started. We see various variants of the cars available. Nexon, Tiago, Tigor. Let's go ahead with Nexon. And you can see how your car is going to look like from the outside. It gives you a 360-degree view of your car from the outside. You can change different colors this variant is available in. You can also get a view of the interiors of the cars, which also gives you a 360-degree view of the inside of how it's going to look like. And once you finalize which particular variant and color you want, you can just summarize it and scan this QR code to get these details on your mobile phone.
Well, we also caught up with Shailesh Chandra, who's the MD at Tata Motors PV and Passenger Electric Mobility. Listen in to what he had to say.
We are very proud to open the two new exclusive Tata EV stores, Tata.EV stores today in Gurgaon. These stores in future are going to be the stores which will be selling EVs. Right now we are selling in the format of shop in shop, where EVs are sold along with the ICE vehicles in the current showrooms. But these are the first two showrooms we have started in Gurgaon for the simple reason that NCR is a big market, the largest market actually in the country. It is also facing the acute pollution issue. At the same time, we also see that the EV adoption has been very high in the city. In the next year, we are going to also launch 3 additional EVs, which would make it a portfolio of about 6 products.
Well, 2024, which is just a few days from now, will witness the launch of over 100 cars and two-wheeler models, breaking the record of 2023. Now, it's quite an exciting year, 2024, for the car makers, because the new electric cars and SUVs will dominate the market in 2024, with Maruti Suzuki making the mark in their first electric SUV. Now, Sumit Chaturvedi, he's giving a lowdown on what all could create the buzz in Motown next year.
After remaining silent on new launches in last month of December, Indian car and two-wheeler market will see a slew of new launches beginning from the first month of the new year. Hyundai will launch a refreshed Creta SUV on January 16, spearheading its launch of new SUVs in 2024. However, the rest of the year will be dominated by electric vehicles. Maruti Suzuki will make its entry into the EV space with the launch of SUV EVX, while Tata will launch its EVs Curve and Sierra. Mahindra will launch its XUV.E8, which will be an electric version of the XUV 700, while Toyota will launch its urban SUV concept, and Kia will launch EV9 based on its eGMP platform, while Skoda will also launch its Enyaq 4 electric car. But apart from electric vehicles, the other major new models that will dominate the market will be Maruti Suzuki's new Swift, Mahindra's 5-door Thar lifestyle SUV, Mahindra XUV 300 facelift, Hyundai Alcazar facelift, Maruti Suzuki Wagon R Flex Fuel, Nissan Qashqai and Juke, and Renault Duster that will be launched in 2024. Mahindra Bolero Neo Plus and Toyota Rush will be two other new SUVs that are slated to be launched in 2024. Luxury car market will also see a number of launches beginning from new BMW 5 Series, Volvo EX90, Mercedes-Benz GLB and Lexus LBX. Among the major two-wheeler launches of 2024 are Royal Enfield Shotgun 650, TVS Zeppelin, Bajaj Avenger 400, Bajaj Pulsar NS 400 bike, new Hero X3R and new Hero Extreme. As the Indian economy gains momentum, more and more customers are planning to go for a new set of wheels. However, automobile companies are also taking an advantage of good demand, and experts say the average price of four-wheeler and two-wheelers can increase between 2 to 5% in the new year.
Well, thanks, Sumit, for that update. Looks like we have to be keeping an eye on Motown. But another thing that we must be keeping our eye on is this ET Now exclusive. The government may announce increased cash payouts to farmers in the interim budget. In fact, ET Now has learned from sources that Finance Minister may announce increased Kisan Samman Nidhi for farmers in the interim budget on February 1st. Prakash Priyadarshi has more details. Prakash?
Yes, an important development coming in as we are learning from our sources that the government may announce increased cash payout to farmers in interim budget. Sources are saying that the funds for the Kisan Samman Nidhi Yojana is likely to be increased to rupees 82,000 crore to 85,000 crore, which is 60,000 crore now. As you are aware that the government had in last year budget allocated rupees 60,000 crore under PM Kisan Samman Nidhi Yojana, and now there is a prospect that the government may increase these overall funds under this scheme. In addition to that, sources are also saying that the numbers of equal installments to be increased to 4 from 3 in a year. So it's a very big decision that the government is likely to take before general election, which is due next year. Moving ahead, sources are also saying that the farmers are likely to get rupees 8,000 to 10,000 per annum directly into their bank account under this scheme. We are given to understand that the Agriculture Ministry has sent this proposal and active discussion is going on, which means increased cash payout to farmers is going to boost government's prospect in 2024 election.
Well, that's a boost for the Indian farmers. But with that, let's take a breather and shoot off to a short break. But stay tuned because we come with more and we discuss more on the stock-specific action post the break.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at what the futures and options roundup is looking like. Ansh, what does it look like to you?
Right, so starting with Nifty first, let's get the chart on the screen as well. As you can see in the chart, initially Nifty was trading within a range of 20,850 to 21,000, and post giving a breakout, it started consolidating later in the above region of 21,250 to 21,500. Currently, it seems to be just between these two consolidation where it can continue to hover. Let's see what happened in F&O segment. In Nifty futures, we saw open interest falling by around 8%, indicating short covering, which is a positive sign. On option front, let's get the bar chart on the screen as well if we have. We are seeing very active call buying at 21,500, indicating Nifty to touch this level. As you can see on the right side, that red bar is the 21,500. Whereas on the downside, we saw very active put writing at 21,000. The left spike of green is the 21,000, indicating very strong support around this level. Now let's have a quick view on Nifty Bank 2 as well. Index seems to have formed a thick consolidation of around 1,500 points between 46,700 to 48,200, within which it has been hovering from last 13 to 14 sessions. So Nifty Bank needs to come out of this range to catch a clear trend either on upside or on downside. In index futures of Nifty Bank, we saw open interest falling by around 3%, again indicating short covering, which is also a positive sign. If we see the index option of Nifty Bank, here we are seeing very active call buying at 49,000 mark, right side of the graph, that red one. And while on the downside, we saw very active put writing at 47,000, the green candle spike which we are seeing on the leftmost side. This indicates that Nifty Bank may take good support around that level. Shifting our focus to what FIS did, index futures long got covered by a 3,200 contract, but we also saw short getting covered by around 7,500 contract. So net to net, we are seeing a net addition of around 4,300 contracts on upside, due to which the total long positions has also inched higher from 65.2% to 66.6%. So in a nutshell, data shows positivity in market, but huge volatility can be expected as option traders are taking positions in the far away from the current levels.
Well, thank you for that, Ansh. But shifting focus now on the equity front, logistics stocks will be in focus, and that is because UBS has initiated coverage on a handful of logistics stocks, and we have Gaurav to take us through what was highlighted by UBS. Gaurav, which are the stocks that has been highlighted by UBS?
Right. So UBS initiated on 3 new stocks from the logistics space, and the first one, let's talk about Delivery, where they have initiated with the buy rating and a target price of 500 rupees per share. Now this gives a healthy upside around 30% from the current market price. And what UBS has to say is that they believe that there is ample amount of growth left for the company, and with spot-on integration in its books, it will be really interesting to see that the revenue is growing up from this level, and that is why they have initiated with a buy rating and a target price of 500 rupees per share. The next one we have is Adani Ports, where they have initiated with neutral rating and a target price of 1175 per share. Now they believe that Adani Ports may see limited upside from here on, because we saw that the Adani Ports stock was up almost by 20% in this month itself, and they also believe that there is a modest growth in the sector itself, and that is why they have initiated with the neutral rating and a target price of 1175 rupees per share. The next one we have is Container Corporations, where they have initiated with sell rating and a target price of 770 rupees per share. Now they believe that Concor is continuing to lose its market share, and there is high valuation for Concor at this moment, and the stock is trading somewhere in the range of 840 rupees, and they also believe that we may see some kind of weak EXIM cycle here on, and that is why they are a little bearish on Concall, and they have maintained sell rating and a target price of 770 rupees. That means we may see some kind of downside of around 10% from these levels. So it will be really interesting to see what happens with these stocks from here on.
Right, Gaurav, thank you for that. So yes, Adani Ports, Concor as well as Delivery, which was highlighted by UBS, and these stocks will be in focus today. But Siemens also will be in focus today, and that is because they had an analyst meet. Now the key takeaways coming from them, now we know Siemens, they are a proxy capex themed stock. So strong capex bodes well for them, and the outlook for the capex looks strong because private sector capex, that is at an inflection point. Now, they also highlighted that the inquiries are converting to tenders, and there is a pickup in the power transmission inquiries as well. Now, talking about the 9,000 HP locomotive order, that is not margin dilutive. That is what the company added, and they are confident on maintaining the profitability going forward. Now, the recent demerger on Siemens AG, as well as the promoter stake of selling the Siemens energy business to Siemens AG, they have Siemens AG has requested initiating explanatory steps to evaluate the demerger of energy business, because if we talk about the recent issues that was highlighting the company, it was that Siemens AG will be acquiring 18% of Siemens Limited from Siemens Energy, and it will be at around 19,000 crore. So yes, talking about Siemens, it will be in focus on the back of the analyst meet takeaways.
Absolutely. So we'll definitely be keeping an eye on that particular counter, but there's also a host of stocks that will remain in focus on account of news flow. So you've got GR Infra Projects. They have a one-time settlement through the Vivad Se Vishwas 2 settlement scheme of the Government of India. In fact, the amount that they've settled is around 41.38 crores. So that particular counter will be remaining in focus, and so will WPIL. Now, when you look at WPIL, they've received an order worth 425 crores from PHED, the government of West Bengal as well, for execution of a turnkey project for package. Now, the completion is due within a period of 27 months, and 3 years operation and maintenance is something that they're penciling in for this particular project. Now, when you look at MOIL, that particular one will also be remaining in focus on account of that 2023 production surpassing 1.6 million tons. Now, mind you that this was 26% higher than the previous best achieved in 2019. Similarly, sales during the calendar year has also exceeded 14 lakh tons, breaking the multi-year record of 2007. So that counter will be remaining in focus, and so will Lupin. Now, when you look at Lupin, they're launching an Ayurvedic liquid laxative that is called Softovac Liquifiber. So that particular launch is in the spotlight. With this, the company enters the Indian liquid laxative market. So Lupin will be in the spotlight, and so will GMR Airports Infra. Now, the news flow in that particular counter is that they are entering into binding agreements with NIIF. Now, the investment amount is to the tune of about 675 crore in the GMR Visakhapatnam International Airport. Now, you've also got Vijaya Diagnostic, and that one has a completion of acquisition of 100% stake in PH Diagnostic Center. So, Vijaya Diagnostic will be in the spotlight, and you also have 361 WAM. Now, they're entering into a share purchase agreement to acquire the balanced 9% stake of MAVM Angels Network Private Limited, or MANPL. Accordingly, MANPL has become a wholly owned subsidiary of the company. So all eyes will also remain on 361, ma'am, Lisa.
So yes, all eyes will be on these stocks. But talk about PSU stocks. They have been the flavor of this year, considering the run-up, the fantastic run-up that it saw this year. But is there a buy opportunity? Does it entail a buy opportunity yet? We had Mahesh Nandurkar, the head of research, as well as the MD Jeffries, to bring some more clarity on this. And he believes that a lot of PSU stocks are actually attractively valued yet. But what are his views on other sectors as well? Let's listen into a bite of conversation we had with him.
So many of the state-owned companies appear reasonably attractive on valuations despite the recent rally that we have seen, especially on the mining side, the power utility side, and there are a few other subsegments which look reasonably interesting. One could argue that possibly some of the other PSU names on the defense side and some of the other segments are not that cheap anymore. But yes, one segment of the state-owned company is still quite reasonably attractively priced at this point in time.
Mahesh, what to your mind is going to be the way forward for global denominated sectors? Because that's a tricky one to call. China will decide metals, US will decide IT.
That's right. So my sense is that we are still looking at an environment where global growth and the US GDP growth is going to be slowing down in CY24 as compared to CY23. And there could be some revival beyond that in CY25. But at least the next 12 months, appear to be a weaker growth, year. So that's the reason why we continue to stay underweight on IT services. And maybe once we begin to get towards the tail end of the next calendar year, and maybe the market would have factored in, by that time, the demand weakness, etc., it would be a good time to start considering at that point in time. But for now, we are underweight on IT.
Mahesh, hi, morning. Just going by the report, given that the outlook is that the consumption trends have been broadly resilient, what exactly does this spell out for the sector going ahead, noting that the inflationary concerns do continue to remain an underlying concern for the space?
I think consumption can be broadly categorized into three parts. I would say the top end, the middle end, and the bottom end. I think the top end of the consumption is doing extremely well. The middle end, we have seen some selective, sectors, subsectors, where we have seen slowdown, which is like consumer durables have seen slowdown, like the air conditioning, the refrigerators, and even some of the kitchen appliances, etc., have seen slowdown. But still, looking okay. But it's really the bottom of the pyramid, which still continues to struggle, in my view. And it has taken surprisingly long for that segment of the consumption basket to recover.
Well, as we wrap up on this edition of Market Cafe, listen in to the word coming in from Ramesh Damani, who talks about PSU stocks and scope for upside in those particular stocks.
The sector that I called this time was, of course, the public sector stocks, Nikunj, and they've had a brilliant run out there. And I think we need to give credit to the Modi government. The public sector was one of the dregs on the Indian economy. We all were taught about privatizing this economy, but they've turned this around. If you look at Meet the People in DIPAM, they're really on top of the game. For the first time, they're doing an OFS, and the prices go sharply higher after the OFS. So the fall is very temporary in those prices. And I think the debate that at least we used to have, that they should be privatized or value will not be unlocked, has now receded. I think we are fine if these companies are so well managed. And I think one thing very important that people missed in the stock market was that A, the government would use these public sector units as the blunt edge for capital expansion, and B, that they were telling them that you have to pay 30% out as dividends. So you go back 2-3 years, you're getting these companies on today's earnings and be 7-8% yield, which is extraordinary bonanza for investors who got in early. So, I think it's been a good place, and I'm very clear, including after what the Prime Minister said in Parliament. I mean, I'm sure you noticed that. They basically, the Prime Minister of India going on the floor, the well of Parliament, and saying, a bullish case of public sector stocks. When did that happen? It's never happened. So we were ecstatic when the Prime Minister did that. I think it was in mid-August sometime. So I think my personal feeling is that the leadership, as I keep telling, is very much intact with the public sector stocks. They probably have a largest way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses.
I mean, the market cap for PSU stocks, we were looking at the data yesterday. From 2021, January 2021, the aggregate market cap for PSUs, including LIC and some new IPOs, is up 3x. That's the aggregate market cap.
I know, it's been phenomenal run, and plus you got so much dividend out of it. I mean, you were getting these stocks basically at 4 or 5% yield, and with the certainty of an order book. It's not that the order books were speculative. We knew the order books for the next 5 years. So, it was, I think there was a whole debate which was, I think, wrongly conceived in the stock market last year, was that you buy quality at any price, and of course that's a misleading. You can't buy quality at any price. You cannot, there's a price that you pay will reduce your investment returns without doubt. And I think the people who stuck to finding value investing and trying to find value irrespective of the PSU, small cap, large caps, it didn't matter. I think did well. So if you look at some of the exchanges, the major exchanges remained stable, but the unloved exchanges went up. The FMCG and the private banks didn't do well. The PSU banks did so well. So the market took note of the cheapness of those particular sectors and rewarded those who bet on that sector very handsomely. And I've been lucky in that.
Within that, you identified railways. You've gone on record and you've said that you bought into the railway PSU basket, less of defense and more of railways.
Not true. Actually, my first bet was on defense and then second was on railways.
Okay, so, but you bought both?
I bought both, and I bought both with a lot of, well, I wouldn't say with the conviction I have now, but I just felt that they were too cheap. And I bought in fact, all the defense companies. I think some of them are extraordinary businesses and they continue to do well. And what's happened, Nikunj, is that we've gone from importing a lot of the stuff to making the stuff ourselves. And now we're exporting it. Look at the number of orders that, say, a company like Bharat Dynamics is getting or Hindustan Aeronautics is getting. It's extraordinary, the shift that has taken place. So I think if you ask me within the PSU sector, where is the leadership? I would say it's in the defense.
And you think that one should look at these stocks, barring the volatility would happen 10, 15, 20%, nobody knows. But as the leadership sector, you think PSUs as a bracket, and within the defense and railways could be subparts?
I think so. And I mean, just to point out, there's a lot of poo-pahing about the PSUs over many years. And I just, wish your people who come on the show and, speak poorly of them would certainly see a company like Bharat Electronics, which I own and I'm not recommending in any way or form, other than educating the public about it. I mean, we bought the stock maybe in the early 2000 at, 300 crores market cap. It's 1,30,000 crores right now. The dividends itself are compounded at some 18-20%, something silly. So they've delivered some superior returns and they never diluted the equity. That is the most important thing I find. They've never diluted the equity in the 30 years they've been listed. They've never diluted the equity. Which Indian companies can you say haven't done that? Even Infosys diluted the equity multiple times. So extraordinary business done extraordinarily well. So I think some of the criticism has been misplaced. I think people who criticize them lumped them all together without trying to do what a stock picker should do or good value investors judge each individual company on its merit. I think they are paying the price for that.
Why do you think these swings happen? I mean, if the market cap was so cheap, if it was a defense, government-backed business, dividend yield was so strong, the same thing happened to, let's say, PFC, REC. Why do markets ignore them?
It's a case of throwing the baby out with the bathwater. A lot of what is called herd mentality. I think sometime in the mid-2000, the mantra became very popular in the stock market, quality at any price. We want good capital allocation. There's some very well-known, one author I met recently called Pulak Prasad, and I respect him for it. He's done a fabulous job.
The book is fantastic, actually.
Yeah, book is fantastic from Darwin, what I learned from Darwin. But he made the statement, he said, I'll never invest in the public sector. But then he was honest to say that I want to invest in a MNC also, because both are very poor capital allocators.
Even conglomerates. He said, I've never bought Tatas or Birlas.
So I appreciate that. At least he had the intellectual honesty to say that I don't want to go to a capital allocator. It's bad. MNCs will also not do it in your best interest. I really appreciate that. But most people just want to throw the baby out of the bathwater because, we made a lot of money in the first round of the PSU, so we were familiar with these companies. We understood valuations out there. And there was a period where we didn't make any money from them. But again, it's come back. So the market has to have the cyclicality and up and down trajectory that goes through. I think people who just said, in 2000 I only invest in tech in India, or people said I only invest in high quality business, pay the price. The market is not a place for the arrogant, it's a place for the humble.